Hey folks, and welcome to the Pipnotic Symposium for the 12th of December 2019. Today we are going to discuss efficient and inefficient moves, and then we're going to have a look at some orders. Okay, so efficiency, inefficiency, what does this mean and why is it important to us? Okay, so if we focus on efficiency, efficiency is simply the market distributing liquidity properly. Okay, so you have price movements that go up until price returns back to the origin. This is a price inefficiency. Okay, price comes back down, so we refill the void, we return to the origin, we move up, down, like so. And this is what you'll refer to as efficient trading. And this is efficient because these price imbalances are rebalanced. Okay, so we had price went up here, from here to here. It came back, it rebalanced this price inefficiency. Now we have a new price inefficiency. The price goes up and rebalances this price inefficiency, and so on and so forth. So this is nice, efficient trading. In contrast to this, price goes up and it kind of moves up and it goes up again and it moves up and does something else. This is inefficient trading because this from here to here is a price inefficiency. Okay, and this is inefficient because price is not rebalanced. Okay, so this is telling us that we have a supply and demand that is out of balance on this whole move here. Okay, so in order for price to return to equilibrium or value or demand, it'll have to rebalance this price inefficiency. When this happens, then price is returning to value. Okay, and you can see this all the time, and the reason this is important to us is because when we see price inefficiencies like this, we're looking for these big pushes higher, inefficient price movement, because we expect price to return to it. So this would typically be our entry. We have a good example of that right here, where we had an area of demand and price inefficiently moved higher. We kind of went around here, we came back down to this area here, but we did not really manage to do anything. And so this whole price inefficiency here is still yet to be balanced. Okay, price came to it just here, and this is nice. This is price returning to equilibrium. This is us looking to take an entry here. We have another one here where we have this one here, which is a parent, and we have the one below, which is a child. And notice that we have green candles, and so this is telling us that price has not been back to this level before. Okay, so we have a price inefficiency that is in need of rebalancing, the rebalancing of which will occur once price returns to this little price nodule or price level here. Okay, and these are very important to us. We have another one here. Okay, price is currently out of balance, and so until price moves back up into this area of demand, well, then price is out of balance for this price movement. Okay, so you're focusing on the most recent swing we have from here to here. This is an inefficient move. Okay, this here was an inefficient move, and then it became efficient. Inefficiency, efficiency, inefficiency, efficiency, inefficiency, and when price goes up, efficiency. And this is important to us because price will likely do what it has done here, which is return to the origin and then depart, move away. Okay, and this stuff is fractal, obviously, so we have inefficiency, almost efficiency. We need price to go up here to be returning to parity. Okay, and so I mean, this is the whole point of having these green candles on the software, is these are showing to us where these inefficiencies are occurring. Okay, you can see we have another one here where we have, you know, I'm just going to use this tool here, where we have price kind of left here, went up, it came back to here. Okay, but we still need to return to this area here to completely rebalance this price movement here. Okay, so this is very important to us. And what you can do is, when we often talk about the beginning of the buy zone and sell zone, and I often say that we have 0 to the high, like so here. Okay, and so this area up here is kind of risky trading, and this stuff down here is good trading. So what you can do is you can do this, where you use Fibonacci tool and you remove all the levels on it, and you put 50%, 25% and 75%. And this is just showing you when you are moving into an area where price is returning to equilibrium, or essentially returning to the buy side of the market. Okay, so if you use this combined with the boxes that we like to use here, we have the buy side, which is from here to here, and we have the sell side from there, from the high to the low, which is here. Well, this enables us to focus on where we want to be selling and where we want to be buying. So you want to be buying below this line here, preferably in the lower quarter of this area here, because this is price returning to parity. So this is the highest probable quadrant in which that you should be buying, and this is the highest probable quadrant you want to be selling. Okay, and so if you kind of divide price into little chunks like this, it enables you to focus on the highest probability price levels on the chart. Okay, so here we have, this is good, this is good. Okay, we're not buying anywhere here, we're buying only here, and we're selling only here. And this is obviously closest to this origin. So you could take from here to here, you could divide it into two, and you could divide that into quarters here, and so you're just getting deeper into the sell zone here. Okay, there's nothing to do, there's no reason to buy on the red side of the chart. Okay, I hope that makes sense, because it's a really handy way to look at it. Okay, so if we go on this one here, and we look at the most recent clear swing, we go from here to here. Okay, and where is the most recent high? Well, we have that about here, I think. So we can go from here. We're going to go from here to the low for the selling, and for the buying, then you go from here to here. So the most profitable place to sell would be up here. The most profitable place to buy would be down here. Okay, so it really kind of divides and conquers the market, and it shows you pretty clearly where you want to be buying and where you want to be selling. So we have the sell zone, which is the top part of this, closest to the origin. Here we have the buy zone, and then we can divide the chart like this, and then it tells us the buy side and the sell side. So you have the sell zone, the buy zone, the buy side, and the sell side, and so it really enables you to make some pretty good decisions. So you know that you want to be selling on the sell side in the sell zone. You want to be buying in the buy side in the buy zone. Whew, bit of a tongue twister down here. Okay, so it's super clear. And so if you're doing this on your major time frames, and you're going down to, let's say, the smaller time frames, and you know that you'll be buying in a macro buy zone, and you'll be selling in a macro sell zone. Okay, so it's just really going to help you make better decisions. Okay, good. I'm not going to talk about that too much. I'll let that kind of sink in. You guys can have a look at that and see what you think about that. But let's have a look at some entries here. So we currently have this going on here. This is the robot. I'm trying to get this robot configuration right. It's cost me a bit of money. That's alright, because it's very educational. So if we look at this swing here, so we do this from here to here, like this, and then the buy side is from here to here, and the sell side is from here to here. Okay. So now if we look where we want to be buying down here, which happened. You see it happened here already, and we want to be selling up here. Okay, so I'm just trying to get the robot to figure this out, and it's a bit of a challenge, but I will absolutely positively succeed at this. It's just going to take me a bit of time. Okay, but this is essentially what we're looking at here, because you can see that we are getting very close to the origin of this move down. So this is one where we want to be selling, and for buying we want to be buying down here, and this trade already happened. It happened right there. Okay, just here, which is essentially this bit here. Okay, so pretty interesting stuff. So I just have like a bunch of trades on. I updated these earlier today. So if we have a look at those, and these are going to be, I'm going away from these, from the 1 minute, sorry, from under the daily level. So I'm going to be focused on daily, weekly and monthly for pools, because this seems to be doing the best. And so if I'm doing this again, I mean, we'll be buying, we go like that. See, we have marked off the swing here, and now we want to mark off the buy and the sell zones. The sell zone is the high is here down to the origin, and the buy is from here to here. Okay, so now we know we want to be buying here. We're buying right at the edge, which overlaps nicely with this, and we want to be selling somewhere up here where we have supply. Okay, so I think it's a really nice way to figure this out, and eventually I'll build this into pools so that it's doing this automatically, and I'll also be doing this in discretionary supply and demand software, because I think it's such an awesome way to visualize where you should be buying and selling. And this is also ensuring that you're not messing around anywhere in here in the middle, because this is low probability. You want to be buying as close to the lows as possible and selling as close to the highs as possible. Okay, so these major turning points here, okay, because this is essentially where the major flows are coming in, and you know that because when price got to this price level, it managed to move all the way up here, and when price got all the way over here, it managed to move all the way back down to at least 50% of this move. Okay, so we know that there's serious selling here, serious buying here. Okay, so it's just a really interesting technique and methodology that we can use, and this is something I've been doing a lot while doing the developing of the software, because it really helps me kind of qualify these areas a little bit more accurately with a higher degree of probability. Okay, good. Well, I'm gonna leave it at that. Check out the orders on the order page, and if you have any questions, comments, please send them in. Thanks for watching.